Jeff Peterson from Heartland Farm Partners is our market analyst this week. The U.S. Department of Agriculture's October crop report helped breathe life into soybean prices. After the agency updated its estimates on the size of this season's harvest, the November 2017 futures contract gained 27 cents and reached $10 a bushel for the first time since July 31st. December 2017 corn comparatively has been sluggish. The contract closed within a 9-cent range for 5 straight weeks. Jeff joined us Wednesday afternoon to talk about how the USDA's latest numbers have impacted prices, but we began by asking about harvest progress and yield results across the country.
You know what, Jeff, this harvest is going along slow, and especially if you take a look at the East versus the Western Corn Belt. Western Corn Belt is slow, but even nationally, 28% harvested on the corn side. Jumping over the bean side, 49%. Doesn't seem so bad, but last year we were 59%, and actually the 5-year average was 60%. Then we move over to Nebraska, and on the corn side we're only 17% harvested. Doesn't seem so bad, but we were 33% last year, and actually 39% would be our 5-year average. And then we jump over to soybeans. And on soybeans, we take a look at that, and we're actually 33% harvested. Doesn't seem too bad at first glance, but 59% last year, 5-year average 67%. Now we took a little time to dig into the records. That's actually the slowest start we've had on soybeans going all the way back to 1986. And it's the 5th slowest start we've had going all the way back over 36 years on the bean side. So it's off to a slow start.
What are you hearing for yield results?
You know, it's all over the board. But I do think, as much as I hate to admit it, Jeff, is that USDA is pretty close in their numbers. We wouldn't have believed it earlier. We're hearing some pretty good corn yields, but yet we also are hearing some bean yields that are off a little bit from last year, so I think USDA's got it close. One thing that does worry us a little bit is the harvest loss. What we're finding, a little bit more stem borer problem out there on beans. Also, some of the bean pods are popping, so as a result, we think that is going to impact yield just a little bit.
You guys also went into maybe why those yields and production is going to be a little bit higher than some people are expecting. Explain why it might be.
Yeah, it's really probably a lot of little things. The best way to think about it, we really, over the whole corn belt, we came in and actually had subsoil moisture that was in really pretty good shape. And early on, it looked like there was going to be some dryness, but then if we were looking at a precipitation map, we'd have some areas get missed, and then along comes the next month and those areas would get hit. So precip probably never got quite bad enough to really cause us a problem. That's probably best seen as we look at the crop condition numbers. Now, we used to look at just the good to excellent numbers, but this year, as we studied them a little deeper, we went and looked at the poor to very poor and the fair, and as we brought those all together, it really showed that this year, unlike some of the other years where we've had these type of temperatures, the plants never got stressed as much. And as a result, when we got the cooler temps in August and a little bit more precip, we still were able to bring these yields back and give us some better numbers than what we would have anticipated just by actually going through the actual conditions.
Let's talk about prices. How have they responded to the last USDA report?
It was nice to see the report, and it was nice to see the strong move that we got with soybeans. As much as I wanted to see higher prices, though, it felt like maybe that bean move was a little bit overdone. One of the things that we had noticed, the funds, they jumped in and they bought bushels, and the funds are long right now. Now, we had a nice move up over $10, which gave guys a chance to sell a few beans, off the combine if they needed to. Now we've kind of started a pullback in here, and we'd probably expect to see a little bit of selling pressure in the short term, not the long term, but in the short term, just because we're really just getting into the strong part of really the soybean harvest.
That soybean rally also triggered your first sale for the 2018 crop, correct?
Yes, it did. We did. We decided, you know what, we were able to get up over $10 on the November 2018 contract. We said we don't really like the price, but we think that's a good starting point for us to get things kicked off.
Lay out where you are for 17 and maybe where you would target additional sales.
Yeah, and as we come in and start looking at this whole crop, I mean, one thing that we have to say is that if you've got bushels and you're going to have to move them to town, make sure your bins are full first. As you come into town, the big thing that we want everybody to think about is that, do I need to generate cash or do I really need to sell them? If I need to generate some cash, there's some good alternatives. What we like first to do with them rather than sell them, because overall, Jeff, we believe after we get past harvest, we think we'll see basis improve. We think the futures price will get better after we get past harvest. We like the extended price contract and think about it this way. What that allows you to do from the elevator side is, in essence, you're selling your bushels, and then they're allowing you to watch either the March or the May or the July futures. If the market goes up from here, you're going to get a better price. However, if the market goes down, you are going to get less for your crop. But we do like that one. The reason we like that one is you can get an advance on it, so it generates some cash. The next best alternative would be the basis contract. So you could set your basis, collect some cash. Our least favorite choice really would be putting stuff on delayed pricing. The reason that we don't like that would be the fact that we think you're going to spend too much up on storage and you're not going to get those dollars back.
Why do you think prices and basis will improve?
Well, a couple things that we're looking at. First of all, let's start off on soybeans. Overall, in the world picture, world stocks are tighter than they were a year ago. In the U.S. situation, U.S. stocks are going to be tighter than they were a year ago, okay? We combine those also with the situation in regard to weather in South America. La Nina, there isn't a lot of talk about it, but La Nina is having a little bit of impact on South America. It's probably not showing up yet, but I think it will. But what is causing this to happen is we're seeing a little bit of dryness actually happen in northern Brazil, which is keeping them so that they aren't able to get planted as quick. We think there's a chance that could come back and cause them some additional problems as we go further down the road.
Will you explain a little bit more on your basis thoughts here?
Yeah, the basis thoughts is that we're getting far enough through harvest and we're getting far enough through the calendar year that we believe that even though there's a lot of bushels out there, we really think that the processors and the exporters are going to use up a lot of those bushels. And as a result, the bushels are going to get tucked away, and ultimately once we get past harvest, the bin doors are going to close and we will see better basis. Having said that though, Jeff, if you've got bushels that do have to move at harvest time, then what I'd say is on beans and on corn, 4 bushels for harvest delivery. If you have to sell them, you need to be locking the basis up on those now. There's some very good basis levels out there right now. Look around at some of your local processors and there'll be some good opportunities there.